Good morning. Okay, today I have two investment myths that I want to dispel for you. And those are the ideas that first, cash is worthless, and secondly, that you shouldn't own any in your investment portfolio. So let me talk about that in a little bit more detail. You should have cash in an emergency fund. And that's not what I'm necessarily talking about. That's a separate issue, right? An emergency fund is a fund you can go to where you need money in a bona fide emergency, and you can get access to it. And it can be in different forms. You could have it in a high yield savings account, or you could have it in CDs, but you want to put it in vehicles that you are able to get access to when you need it. You don't want to have to, sell an investment at a loss or take risk and lose that money when it's money that really is needed in an emergency. But I'm talking right now about cash as part of your investment portfolio. You hear frequently, cash is trash. It's worthless, right? Inflation is at all-time highs. You don't want to hang on to this stuff. Another well-famed investor likes to call CDs certificates of depreciation, right? A lot of this stuff is a bit misleading. And the reason why is because cash is very important to have. And I'm not just talking about precious metals, right? That's a type of authentic cash that I've advocated you own some of. I'm also talking about paper cash, US dollars. And the reason is twofold. First, we know that interest rates are rising right now, and we know that the Federal Reserve, our central bank, has indicated it's going to start tightening monetary policy. This means that in the future, their intent is to reduce the money supply, which makes cash more valuable because there's less of it. Now, assuming that this is just a head fake, that they aren't actually going to do that, the fact that prices are going up is still an opportunity for you to buy. And the reason why is because inflation has the effects of not all businesses, but many businesses. It causes their values to decline because it squeezes their profit margins. This will cause stock values to decline in nominal terms and in real terms in the future. I anticipate personally that this will happen over the next year. Now, to not have any cash at all is your prerogative. However, to not have any, I think, also puts you at a disadvantage because you want to have some flexibility. You want to be able to buy at significantly reduced prices when those opportunities present themselves. And while many will decry this as market timing, it really is something that is very realistic in the future. Statistically, it's a lot more likely we're going to see new lows than new highs, since we've been setting high after record high month over month. So not only do I recommend that you invest in a lot of those businesses that we've talked about before, right? The value businesses, agriculture, energy, a lot of those value stocks that we're seeing that rotation into now, which I had talked about previously on videos with you. I'm also advocating that you own some cash. Have cash. How much you have is up to you. It's based on your own risk tolerance. If you're invested in a 401k, or if you're military and you're invested in the TSP, have some money in the G fund. Again, you're not going to necessarily hear this from the vast majority of financial advisors or people who are willing to give you their financial advice. They're going to say, it's a terrible idea. The stock market is a great hedge against inflation, which it isn't necessarily, but you want to have some cash. I'm not telling you to hang on to it for decades and decades, but I'm saying that you should have some right now in order to take advantage of opportunities that are going to come in the near future. Please post a question or comment. Send me a private message if you want to talk about it privately. I always enjoy reading your comments. And until next time, I wish you unlimited success.